in the next 30 minutes. It is a massive conversation, but I certainly look forward to hearing our speakers shed some light. And before we delve into that main topic of the day, each of the speakers is going to give their opinion on the stories which are going to show up very shortly on your screen. Now, these are the top 10 stories that we've seen over the last week. Of course, we put out 10 a day, there's 50 a week, and even within that, we have to be extremely selective. So these just happen to be a top 10 selection of what's piqued our interest over the last week. So Jessica, if I may start with Jessica Robinson, she's the founder and managing director of Moxie Futures. Thank you very much for joining us. And which story is jumping out at you, please?
Okay, I'm going to be greedy and have two, please. First is obviously the GCC asset managers expect stronger ESG demand. I think this is incredibly timely, and it's certainly what I'm seeing in terms of the work I'm doing in the GCC with financial institutions and how they're getting ready for that increase in demand. The other story would also be the one about the climate financing need in terms of the UN's predictions. I think in the run up to COP26, we all know the critical piece of the jigsaw that is going to be hotly debated is how we actually really scale up that level of financing to hit the Paris Agreement targets. So those are my two.
Excellent, thank you very much, and two great choices. Let's move on to Dr. Patrick Schroeder. He is a Senior Research Fellow for the Environment and Society Programme at Chatham House. Patrick, thank you very much for joining us. Same as Jessica, which story is jumping out at you in neon flashing lights?
Yes, hello everybody. Thanks for inviting me to join today. I might also pick two, if that's okay. And the first one by Alok Sharma, who's the president of the COP26 for this year. Climate change is the biggest security risk that jumped out, and that actually links to a report a couple of colleagues of mine at Chatham House published a couple of weeks ago. That's the climate change risk assessment for 2021, and which really shows that the risks are not to be underestimated. There's not the direct impacts only that we see from climate change, but compounding risks which go into all kinds of other security domains, including potential risk for more violence and even interstate conflict. That's one. I can post the link in the chat if you're interested. The other one is also the shortfall in funding for developing countries. So there was just yesterday the announcement by the US that Biden administration will double to over 10 billion per year, but I think we're still short of achieving this, and this will be important for the COP to achieve that target.
On that first point, I'm going to touch on both of those as we head through, but on that first point, there's a very good image showing the economic strain as one small wave, COVID-19 as a bigger wave behind it, and then the risk of climate change as a tsunami of gargantuan proportions in the background coming up. And I think, as you just say, the implications of not addressing the mitigation of climate change, of course, is going to happen, but as much as we can mitigate the most negative impacts of it, the risk to security, the risk to refugees, climate refugees, energy security, the list goes on and on and on. So hopefully we'll be able to touch on that as well. Thank you very much, Patrick. Next up is Hawazan Nassif. She is the Vice President of ESG and External Affairs at the National Energy Services United Corp, also known very commonly as NESR. Thank you very much for joining us.
Thank you, Michelle, and I'm glad to be here. Well, I was very intrigued this week by BP's story on how fast they're transitioning in the energy transition, and how that's causing concerns on the investor side, dropping shareholder value and so on and so forth, because this is a question that keeps coming to my mind as I look at the future of energy transition and how that transition should look like. I'm always concerned about energy inequality and I guess unequal access and energy poverty in some parts of the world, and so I guess what I'm thinking about this week is how do we align between the need to transition and move away from climate change risks, but at the same time generate profit and returns so that companies continue to exist. I obviously work in the oil and gas sector in an oilfield services company, and one of the things we're very focused on is developing technologies, we call them ESG impact technologies, which help oil provider, national oil companies produce oil in a more sustainable manner. So, so I guess what I find important is that as we transition to in this area, we need to think of an equitable and inclusive energy mix that would guarantee access for all and does not create unnecessary losers in the transition.
Brilliant. Thank you very much for that. I'm just going to give a quick overview of ESG and the market growth just for our listeners, but I'd like to loop back to that directly afterwards, because it's a very interesting point on how oil and gas producers are faring as well. So we're all seeing that ESG is no longer a nice to have, but a must. We know that. Obviously, there are going to be pockets where the development has been slow, which again, I'd like to touch upon in our very short 30 minutes. So it's a must for reputational, operational, competitive value, many other reasons. And ESG assets may hit $53 trillion by 2025, which represents a third of global assets under management. These are some of Bloomberg's figures. That's a very healthy chunk and represents or reflects the massive surge that we've seen recently. And in the US, ESG funds captured 51.1 billion of net new money from investors in 2020, which is a record high and double the prior year. So the trajectory for ESG is up, and perhaps we'll all agree, thankfully so. So Hazan, I just want to loop back to what you were saying there about oil and gas producers, and obviously you flagged BP and what we've been seeing in the last week. What would you say needs to be their key focus area? You mentioned ESG impact technologies and the need for equitable and inclusive policies. Do you think that these are happening as much as you'd hope? Is there enough awareness?
I mean, there is awareness in the GCC where we operate mostly, but not enough activity, I think, in that area. But as Jessica mentioned earlier, it's coming. There's a lot of pressure from investors and regulators in the GCC to upgrade the performance of oil and gas companies, make it more sustainable. I think the main issues are water because of the region being very scarce in water, and also management of oil and gas or environmental waste in the production, and also, of course, emissions, which is then a global problem. And so some of the technologies that are now coming to the region are trying to make the production of oil and gas more sustainable, so that hydrocarbons and crude oil and gas continue to be part of the energy mix in the future, which is important for the future of these regions.
Absolutely, we can't switch it overnight. Patrick, from your perspective, is it the sort of progress or the sort of focus that you would be hoping from the oil and gas industry, not just in the Middle East but worldwide? Is there still an education element needed there, as we've touched on? Things are moving so fast. Patrick,
yes, I'm here. I'm not an oil and gas expert, I must say that. But yeah, education, I think, is needed across the board amongst many industries, not only oil and gas. I think, yeah, the developments, I think, are encouraging. I think, yeah, we need to move faster on this. And I would say for investors, diversification, I think, is really important. And the other aspect is also not, again, linking back to the risk. Carbon risk currently is not really reflected in the market. So that is also really important to consider.
I mean, on that point, in terms of metrics and improving the quantitative way that such risk is measured, and the quantitative risk of water scarcity that was just mentioned as well. Do you see progress developing in that space to strengthen ESG, give it more credibility, essentially? Patrick.
Yes, I think, I mean, one of the things that we've been following in our work on circular economy is the development of green financial taxonomies. This goes beyond ESG. So we see this as a promising tool with which to direct financial flows towards more sustainable solutions. So what I mean, the advantage of these green finance taxonomies is that these provide common classification systems to identify specific activities, assets and project categories that can deliver not only on climate, but also again, social, green and other sustainable objectives. And they include also thresholds and specific targets. And these taxonomies, they use common principles. They aim to be science-based, which is important, but they're also dynamic. And then there's also they're conscious about the importance of harmonizing between countries. So what we've seen is that there are taxonomy developments in different regions. So the EU, for instance, has been developing this for quite a number of years. It's quite a drawn-out process. We recently organized an event to understand the opportunities to harmonize between the EU and the UK taxonomies. And I think another important development here is the development of the Common Ground taxonomy, which is a dialogue between the EU and China. So there seems to be some alignment between those large economies as well.
How long till we can start seeing real development on these? Because these are even on a geopolitical basis, these are mega efforts underway that if fully realized could have a huge impact. What sort of timeline are we looking at?
So for the EU, it's actually quite soon. So it's already passed in various kind of stages of the legal process. There's been another consultation round that's just closed now in September. So over the next year or two, we will see that having real impact on companies and financial decisions.
Okay, excellent. Thank you. Jessica, just before we go on to our first survey question, I just wanted to get your view on the overview of the Middle East, bringing us back to the region. So at the moment, and this is a global number, there's a clear gap between the need for investment in net zero and the reality of current financing. The Energy Transitions Commission, which more commonly known as ETC, put the need at $1 to $2 trillion US per year up to 2050. Some might argue that that's not as much as they may have thought it would be. But from your perspective and your visibility in the region, how do you see assets changing?
So I'm going to so I've been in the Middle East for 4 years now, and I was in Asia for about 12 years prior to that. And during that time, I've been in the ESG sustainable finance space. So I've sort of seen quite a lot of development on the ground in terms of different regions. One thing I'm observing, I mean, when I arrived in the Middle East, we were so behind the curve in terms of understanding ESG, understanding the risk perspective. I think what's happened in the last 1 to 2 years is a dramatic shift and progress. A lot of that is coming from regulators. I think that there's a realization that, for example, on climate risk, these are very much material. So from a institutional investor perspective, I think they're definitely waking up, and we're seeing that very much on the ground, particularly the work I do with large investors and banks, that realization that something needs to happen and it needs to happen quickly. The challenges we face are a lot around capacity and expertise. There's not a huge amount of ESG expertise in the region. I also think there's a challenge around many people still perceiving ESG to be CSR. Yes. Which we all know is clearly not the case at all. And, you know, I mean, to Patrick's point around taxonomy, this is very much why we need globally accepted taxonomies to very much give these financial institutions definition around what can go into what box and what actually entails an ESG investment. So I think that's going to progress, but we need to move a lot more quickly, and we need to scale up the expertise. The other thing I would just mention is on carbon. And again, Patrick mentioned carbon risk. I think that we're now seeing a lot of institutional investors, including sovereign wealth funds, put internal carbon pricing mechanisms in place. I think this is really important to help us actually speed up the energy transition, because the sooner we put a market value on GHG emissions, the sooner we can actually price it into the market and actually develop the financial products that sit around this transition as well.
Indeed, giving goalposts and benchmarks just brings a lot more visibility into it. And actually, I'm glad you mentioned carbon pricing, because that's our links to our first survey question. And also, you touched as well there on the need for that education that Patrick was mentioning. So in July 2021, investors with 6 trillion worth of assets under management called for a global carbon price. This will have a meaningful impact on securing more cross-border carbon pricing mechanisms at COP26. Agree or disagree? Please note we did not have a meaningful impact on securing a global carbon price at COP. We don't think that that's a viable proposition. It'd be great, but the complexities involved are just far too great for that to happen in the next 6 weeks or so. So just a quick agree or disagree on there. And then we will pop back to that as soon as it's ready, please, Irene. Thank you very much. Hawazan, what are your thoughts? What do you think?
I mean, just to build on the last comment, I've been working closely with the PIF, the Public Investment Fund of Saudi, and they're extremely active on ESG. They've been so for the past year at least, so they're developing their own ESG strategy, and they've made several big announcements recently on working with Tadawul on carbon trading and so on. I think that trend is you see it across the GCC with all the visions that are announced, like Saudi Vision 2030, Oman Vision 2040, Abu Dhabi's Vision 2030 as well. All of them have sustainability at the core of these visions, because obviously, transitioning sustainably to a greener future is important for the livelihood of everyone. So I think I'm observing a lot of activity in the last, specifically year, in the GCC around ESG. It's like people are saying it's a new buzzword. It's all people talk about. Anywhere you go, the governments, the investors, the companies. The amount of interest in ESG is just phenomenal. But like Jessica said, there's a shortage of expertise. And also there's, as these countries now develop their own understanding of ESG and how that should look, they're realizing that the models or frameworks that were developed in mostly in the US or Europe does not necessarily fit their needs and priorities or their stages of development. And you see that also in Africa and some countries in Asia who criticize the global ESG framework, saying, it doesn't include, for example, in the energy transition, a transition that is suitable to us and to our future, or our ability to transition fast enough, or our ability to finance that transition. And so there's
that gap between harmonization on a global basis and also accounting for the nuances of every country and every region, and that everybody is at such a different level, isn't it? It certainly can't be a blanket.
Exactly. It's not a one size fits all, which seems to be the push right now, and it just won't work that way. So there's I'm seeing this year at least companies taking charge of the conversation in the GCC and saying, this doesn't work for us. This can't work. We can't do it financially. We don't have the resources. We don't have the manpower. And so there's a pushback, which I guess is healthy, because we need to create a system that works for everyone and take everyone to a better future, as opposed to creating, like I said earlier, unnecessary losers in this transition.
Absolutely, propelling forward in a strategic way rather than making mistakes you're going to have to backtrack later, and could be very expensive socially and financially. Okay, I think there's quite a clear response there. Patrick, what do you think? Do you agree?
Yes, yeah, I agree. I'm with the 91% on this one, I think. Yeah.
And when we say meaningful impact, what would you hope to come out as those final doors shut at the end of COP? What would you hope in terms of development for carbon pricing mechanisms? Would you hope more progress on CBAMs? Would you hope more clarity on new ETSs or new taxes? I mean, we're seeing huge progress. In 1990, we had 2 carbon pricing initiatives, this is according to the World Bank, and now we have around 64. So that is big progress, but a lot of that progress has been in the last decade or so. And I know that those of us who follow the carbon pricing world, there have been a lot of lows amid those highs, and that it's been very slow moving, and it's still very complex, although obviously things are certainly beginning to beginning to accelerate. What do you see by meaningful impact? What would you like to see? Patrick?
Yes, I mean, for the COP,
yes.
I think one of the important milestones, I think I mentioned also earlier, we need to achieve the commitment to reach the 100 billion per year. That's really important. From my perspective, I also want to see more ambitious NDCs. I think these are quite important, and across the board, most of them are unfortunately still not ambitious enough to really lead us to where we need to be in terms of a secure planet, etc. The political commitment, I think, coming out of COP26 will be important. A lot of the technical work, including that on carbon pricing, I think will be ongoing. I think that's the main expectation from my side.
Jessica, what about you? I'm assuming you were in the agree pot. I'm intrigued to see who wasn't. But what about you? What would you hope to?
Way back when, I was quite involved in the EU ETS. I used to run a carbon finance company, so I'm a big proponent of what carbon markets can do. And obviously, being in Asia, I was very linked into the development of the Chinese carbon market, and I think that's going to be transformational. I do
just in covering power sector, it's already the world's biggest ETS, isn't it?
Yeah. And I think, when you look at it from an investor perspective, and this is one thing I've been trying to push here in the GCC as well, is when you introduce the mechanism, whether it's compliance and voluntary, you build in the confidence into the market. So that drives capital, because investors understand that the carbon price is the future, right? And that's what we need. We need our policymakers and our regulators to send very clear signals to institutional investors and to corporates that this is happening. The sooner that happens, the better. I mean, I understand why you didn't include it for the COP26, let's have a global carbon price, but I think that ambition should be front and center, because we need to build that confidence in the market. I mean, it's really, to me, it's very straightforward.
Do you think that a global carbon price is possible? Because we have a lot of conversations on this platform, obviously, and the vast majority say the idea of a single global carbon price is not realistic, but a global pricing mechanism, and within that, several different avenues for different regions and global nuances, that is viable.
Yeah, and I mean, I'm an environmental economist, so I'm obviously going to land in one corner, but I do think a global mechanism is critical that then also reflects the differences, as we touched on before, in terms of emission reductions in certain industries or certain technologies are different to others. So we do need that global mechanism, and I actually think it's a necessity.
I agree with you. If we could bring up that second survey question, please. It just links to the US, and we've already touched on what's been happening in the US at the beginning of this with the climate aid, but just be keen to get your views on this just as we head towards our last few minutes. President Biden's pledge to double the US's climate aid will immediately help accelerate ESG funding. You just mentioned about confidence there, Jessica, and having that goal in sight and so on. Do you think that this is going to make a big difference in terms of sentiment for ESG?
I think the sentiment across the big institutional investors is already there. I think any positive messaging can help. I don't want to end on a negative note, but one thing that really concerns me today is the high level of greenwashing. And I think when we look at some of the financial products that are coming online, we're looking at actually where the capital flow is going. I think we need to do much, much more to ensure that the taxonomies, but also the assurance frameworks that sit around that are very robust. Because if we get into a situation where everything is labeled ESG, clearly we're not doing our job right.
And that's where the metrics and the data and so on, that's when they come in and again, that just feeds directly to that confidence as well. What about you? What are your thoughts on that survey question? Do you think it'll have an impact, or do you think it's part of the broader push?
I mean, I think as a global community or regulators in the global economy, we need to incentivize and penalize better to see more results. And so the more we create incentives, either through regulation or aid or better returns, the more we're going to see actual action happening. Because I mean, I'm speaking from our own experience, having these ESG impact technologies which will help mitigate climate change. It's sometimes a challenge to actually get clients to sign on to them and buy them. So when there's a global mechanism for carbon taxing or pricing, and when companies are more incentivized or penalized, for that matter, for not doing things the right way or the best way, the more we're going to see results on that front.
And as Jessica said, at the moment, it's very much about financial institutions also getting ready for this increase in demand, and that links to that greenwashing. They need to be getting ready in the right way. Agree and disagree. Okay, there's not too much of a split there. Patrick, any thoughts just before we head on to our final closing comments?
Yes, on the poll, yeah, I can understand why it's split, because I was a little bit, when I saw immediately help, I'm not quite sure if it will immediately generate any impact. Obviously,
overly optimistic, perhaps.
Yeah, and I mean, it's a good signal from the Biden administration. That's for sure. But more needs also to happen, and it's still comparatively small.
Absolutely. I mean, we've got the 90+ sovereign wealth funds worldwide, which oversee 9.7 trillion assets, are lagging in net zero initiatives, and Norway's pension fund has a carbon footprint of 107.6 million tons, twice the country's annual emissions, yet it doesn't have emission reduction targets. Very surprising, actually, considering where it is. But that's not to be a negative. That's just, as you say, it's to indicate that there's a lot more progress that can still be made.
You're absolutely right to point out Norway, because I mean, it's the largest sovereign wealth fund, and Norway aims to be also, or the Nordic countries more generally, aim to be sustainability leaders. So seems to be this disconnect. But it's not only for Norway. I mean, most of the other funds, the big ones in Asia and in the Middle East, they're all lacking on climate strategies. I mean, it is possible for the sovereign wealth funds to make these shifts. There's, for example, the example from New Zealand. Arguably, it's a small one. It's only about, I think, 50 billion in terms of asset pools, but it's already cut the exposure to fossil fuels by 40%, I think, since 2016. And they have interesting targets. So they want to cut the fossil fuel exposure by 80% until 2025. There's also an interesting emissions intensity target, so to reduce emissions intensity of the portfolio by 40% by 2025.
Okay.
So these, I think, could be interesting metrics that can be used also for other funds.
And that level of ambition, again, feeding into what Jessica was saying about always setting that target, and just to give that market that focus as well. Fortunately, we're just at the end now, but before we wrap up, I just want to squeeze on an extra couple of minutes, if that's okay, because I'd like to hear each of your thoughts on, in just a few sentences, what you would like to see addressed in ESG. If you had to prioritize one or two areas on your wish list, and you had all the power to make them happen, what would you like to see happen in the next year when it comes to ESG? So, Hawazan, can you give us an idea, please?
I think I would like to see a standardized reporting framework, so that investors can understand what companies are saying, something that is comparable and easy to understand. And so that to me would be a very positive development in ESG reporting.
And viable within a year, surely. Mm-hmm. Yeah. What about you, Patrick?
Yeah, I think I agree with that point, and I think we're beginning to see something emerging. Again, I have to refer to the EU. So the European Commission, I think in April this year, presented a proposal about a corporate sustainability reporting directive. This will update what they already have in place, the non-financial reporting directive, exactly this framework, which we currently don't necessarily have. And I think this will cover about 50,000 companies in the EU who then need to follow these detailed sustainability reporting standards.
And maybe for you as well, progress on the taxonomies as well.
Exactly, these run in parallel, because you need, for investors, you need to have companies reporting on ESG to be able to make these decisions. So that these are obviously connected.
Indeed. Jessica, last word to you, please. What about you? What's on your wish list for the next 12 months?
So I think twofold. I think sort of from a financial market perspective, I wish that the regulators would be a lot bolder. I think in some regions they are, but I think in others, particularly the GCC, they're not bold enough. And I think the financial industry needs that push and that requirement. So I think that's really important. And the sooner that happens, the better. The second thing is, I just wish we could democratize access to sustainable investment for retail investors. So people like you and I wish that we could actually bring these products to market so individuals could start putting their wealth into sustainable investment and ESG compliant products. At the moment, unfortunately, the industry seems to still think sustainable investing is for the super rich. And I just think that's ridiculous. I believe that investment is a lever of change. So that would be definitely on my wish list.
And again, that sounds viable within the next year with the right momentum behind it. Is that correct?
Yeah, and we as individuals need to demand it from our banks and our financial advisors. So we've got to use our voice, right?
And I think that's the education factor, isn't it? Because consumers and individuals are using their voice more in other areas and making progress. The war on plastics and that sort of thing.
We have to use all of our levers of change, and money and wealth.
Exactly.
Is one of that.
But I think people need to be more educated on that they have that choice, that they can make that sort of change if they get more engaged. I think the average person on the street would be a bit baffled if you started talking to them about it. But if you mention plastics, oh yes, no, I feel much more familiar with that. So do you think education factors into that quite a bit?
Yes, I do. And I think we're all responsible for it. So I do think it's a goal that we can achieve.
Excellent. Well, I think we're all in agreement. So thank you very much. Thank you very much, Jessica. Thank you, Patrick. And thank you, Hazan, for your time today. We've covered a lot. We also haven't managed to have time to loop back to the security aspects, loop back to the details and potential black spots of what financial institutions are working on. I would have loved to have gone into greenwashing in more depth as well. So hopefully you'll join us again and we can dive into a bit more detail next time. Thank you very much to all of you for your time.
Thank you.
Thank you. Thank you.